Good afternoon, traders. This is Christian from Tropica Trade Group, and this is Tuesday, March 21st, and this is your end of day market recap. I'm already jumping to the risk disclaimer. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're talking about is for information purposes only. So obviously I got a spelling error in here too. Whole bunch of things wrong as I start the video for today. So very strong breadth day today. Usually that's the case when you see the small caps that really participate. Today they did just that. The small caps were up 1.9% for the day. The micro caps, which have looked worse than the small caps over the last couple of weeks, actually were up 2.1%. So this is a decent move back. And then, of course, you still had a lot of participation in the Qs. The S&P got involved, and the Dow, which underperformed a little bit, was still up 1% for the session. Bonds sold off a little bit. Gold has really taken a breather. I'm going to start here in the video, right? I like to go over a couple bigger concepts in the beginning of this video. You can, of course, skip ahead. The way that I kind of run these end of day videos, in case you're new, is I talk about the macro, the bigger picture first, right? And I'll talk about the Fed tomorrow a little bit, and then we'll talk about the individual setups and the trades, right? I always do that kind of top-down approach, and I use that in my trading, obviously, as well, in terms of helps me figure out overall trend, how much risk I want to take, and whether it's a good investment climate right now. Sorry, I can't speak today. So let's start with gold, because really I thought gold was really interesting in terms of how much attention that this has gotten and the move that it got last week. However, my opinion on gold is, and I know there's a whole bunch of different opinions and people talking a lot, like I said, about gold over the last week, but it's still, when I look at this chart in front of you, it's very sideways to me. So to me, it's trendless. I know people are going back and they're showing 1 month charts and, hey, this could be, gold could really be on to something good. I'm open to that possibility in gold, but what I see is sideways. We could look at this in terms of the weekly chart too, right? Because I feel like I just haven't been covering gold that much. So if you caught this from the lows of, about a week, 2 weeks ago, right? Congratulations to you, right? And this is the overall trend, right? Which again, you could view this as positive, right? Could be a nice, some type of abstract cup and handle or something like that. I don't know. But it's really got to get out of this pattern of getting to the higher range and then selling off. That's what I've noticed with gold. Also, when you tend to have a flat to downward sloping 200-day moving average, sometimes it just is that sideways. So again, this was a real nice, back check into the 200-day moving average at around 1800. And it rose up to right around 2000, which is also that, there's also in gold, for whatever reason, these big psychological levels. So we got up to gold futures about 2000 and we sold off. That coincided with one of the market web's version point of controls, right, which tells you, more often than not to take profits when you do get to a overhead or below version point of control. But a lot of times, in case for long in this situation, that was a great place to be taking a profit. Now, if you're still very bullish on gold, what I would do is watch the support for the week, 1937 or 1938, and see if it holds. But again, like this looked like a short-term head and shoulders pattern. Right now, if it holds here and builds, right, then there's something to that, right? And tomorrow is a Fed day, and of course, gold likes to move around a lot. Gold, the dollar, bonds, right? I know everybody concentrates on equities, but really, I tend to look for clues in what's going on in bonds, as well as what gold is doing, and the dollar, which usually is one of the catalysts for what gold does. So anyway, I thought I would cover that first, a little bit something different. Let's talk about the indices really quickly. Let's do that first. I feel like there's a lot that I want to cover in this video, so I'll try to talk quickly. So yes, we did get back over the 200-day moving average. I talked about this earlier. in the pre-market session today, like how many times the S&P has crossed back over the 200-day moving average, up, so here's all the way, but back at the end of last year. Here's 1, 2, failed here, did cross it here, 3, cross below, cross back above, cross back below, cross back above. So I mean, we are really in a sideways type pattern right now. So we talked about that. If you go back to my video on Friday, one of the things that I mentioned, that man, we've got such a sideways market. This move today, I mean, of course, one day is not a trend. We're in a very, very sideways market. So if you're playing some of these turns and catching some of these places and noticing where there's relative strength, I think you're probably doing better in this market than the average trader, where there's just been better opportunities in this market. We've certainly talked about the semis a lot. We've talked about tech and growth, which has really been outperforming all year long, but really had this big outperformance last year. And then also subsequently, I talked about in yesterday's pre-market session that you might see a bounce in some of the beaten up areas, and they certainly did that today. So there's S&P. I also will go to this 1 hour chart. I thought that this was impressive. I thought that we may have made the high for the day right in the beginning of the day, right? That was we took out this virgin point of control right around 10 o'clock in the morning. Again, virgin point of controls are very important because that's where a large amount of buyers and sellers have met up, but we haven't revisited. So for example, right, this virgin point of control arises from last week's volume profile, last week's value area. And that last week's value area is derived from the previous week's volume. Note, last week, we didn't even get close to the point of control, right, in last week's value area. So whenever that happens, right, when we don't cross the point of control for a period, and again, the point of control is where the majority of the volume occurred in a period, right? When you average it all together, right? If we don't cross that point of control, it leaves a red line called the virgin point of control, and that becomes very significant. So we touched that today, right? And we faded it. All right, but we held in here, so it doesn't mean it's game over, right? When we do take out a virgin point of control, if there's strong enough volume, if there's many more buyers, right, aggressive buyers, right? You always hear that in the markets. Oh, when there's more buyers than sellers. Well, there is some truth to that. When there is more aggressive buyers or sellers, that's going to push the market. So yes, you can get above, right, these areas, but it has to be accompanied by pretty aggressive market activity. All right, so we did get above that, right, and it kind of sets the stage for tomorrow, right? Strong breath, nice move. I got a question before about volume, and I just wanted to cover that too very quickly in this video, right? Everybody always thinks that they need strong volume on a rally. I'll tell you why that's incorrect, right? Look at, and it's a little bit different. So let me provide one caveat here, is that it's a little bit different with individual names versus the indices. The indices sell off on big volume. If you don't believe me, look at the chart below. Where do we have big volume? You have big volume on a sell-off, right? And the reason why that is a lot of times is because when institutions, when they want to get out of a position, they don't take their time. They get out very fast, right? And even though I'm talking about the indices, right? When there's accumulation is usually done pretty slower, right? Institutions pick their spots. It's the same thing with buying a stock, right? And an institution, if you've ever been around, or if obviously you know this if you've traded on an institutional trading desk, right? But a lot of times what institutions will do, like let's say they're accumulating 250,000 shares of XYZ small cap stock, right? They'll pick their spots. They'll buy 50,000 maybe one day, maybe they'll wait a couple days and they'll buy another 50,000. Now, eventually they'll get up to their position of 250,000, but it's usually not in one day unless there's a particular event or a particular reason that they want to get in that quickly. But under normal market circumstances, they're scaling in, right? They're picking their prices 50,000 at a time. When they want to get out of once they get up to their 250, when they decide that it's hit their profit target, or that there's news, they will get out right away for 250,000 shares. So that's why you always see big volume on red days, is because that's generally how an institution trades, is that they leg in, they accumulate, and then once they're done, once they've hit their price target, they're out. They want to get out right away. Okay, so just a little bit because I hear that all the time about, well, this is a low volume up day. It's always low volume up days with the index volume. Okay, so let's move on. So 200-day moving average is something to watch, right? The other thing to pay attention to is this pattern of lower highs. So we're right at the point where either this is going to fail or we're going to continue, right? And again, I think that you have to be cognizant that, of course, we have a Fed day tomorrow. What about the Qs? Well, that's a different looking picture right now, right? That has not been making a series of lower highs, right? That found the 200-day moving average perfectly and bounced, right? So we're actually back to where we were in the beginning of February. So again, very different looking picture. I have a level for you to watch, 309.53. That's the top of the March value area. If we can maintain above that, then the next thing I see is 316.36. That may line up with this 1 hour VPOC, which is also up here. Just wait for this to come in. This is 314.91, so it's not perfect, but you've got some upside targets if the Qs want to keep going. And notice that it took us a little while to basically get back above this virgin point of control from last week. Not that long, just a couple days, right? We had some digestion Friday. Monday, the Qs were fine. They just weren't the outperformer. But overall, that's your picture. IWM, right, did get above the value area for the week, right, 175.88. So it did, like in the very early part of the day, rallied up here, kind of back tested this top of value, and we'll see, right? Obviously, the regional banks or the banks are a big weight in the IWM, but who knows? Like, I'm open to this maybe coming back up to the 200-day moving average, right? Even though this is not the best looking chart at this point, but for a trade, you can maybe think about that, right? If you're looking to kind of play a bounce, right? A lot of people say, oh, geez, well, it looks like a double, it looks like a double bottom. Well, so, it's kind of tough because to think that this is going to go all the way back up here, I don't know. Again, possible 200-day moving average, but I think a difficult, it's a lot harder to get through that overhead supply, in my opinion. But in any event, it's nice to see the small caps, rally today, and it's nice to see some outperformance. I mentioned that I would cover the regional banks because there have been where there's been a lot of focus. So finally, first day in a couple weeks since this has gotten back above the 5-day moving average, right? And this is why I always say, I of course use the value areas, but look at how far below where prices below the value area. So that's not really going to help you too much. I always wait for the price to get back above the 5-period moving average. This is the first time that we have that since going back to the beginning of the month. Okay, so that's an indicator that you could use. Very simple, right? Just price getting back above the 5-day moving average, right? And if it doesn't hold there, you know where to get out, right? Below the 5-day moving average, right? You want to, in my opinion, you want to keep your trading as simple as possible. On the 1 hour chart, I think we almost, and here's a great level to watch for tomorrow. If you're playing in this group, I'm not, but if you are, 46.29, right? Again, if you feel like I always get traders who think that they missed something. Oh, geez, it's up 5%. I missed the move. Well, it hasn't gone anywhere since last week, right? This was the high from last week was 48, right? So that's 46.09. All right. So that concludes the index portion of this. What I thought was particularly interesting, just there's a lot of opportunities for some trades today. There's a lot of names that really trended for the day. AEHR, I'll start with that one because that's what we covered in the pre-market session, right? We had a catalyst for this idea this morning, right? They got a contract, and this name does very well. If you're familiar with this name, the small cap semi name AEHR Test Systems, you know that when they announce like a new contract, that they've won a contract. The stock has acted very well in the past, and it did so again today. Stock's up 15% today, right? So that was a this was a monster trade. Really, really nice. I put this on. We talked about it in the pre-market session, and I wanted to buy some pre-market, and I told I told members this morning. I said, well, I'm going to wait until the open because we were covering it then, but I just had a good feeling that this chart was setting up, because again, even though it had this one big day last week, right, it just basically got us back to the bottom of this value area, and a couple small days, red days in here, right, and then it had this breakthrough. Also, right, there was a level 2 to watch, bottom of top of value, which we kind of held it this week. But really nice, and I'm still holding a long position in this. I did take a couple targets, but we'll see if we get some follow through. This name likes to have follow through, so we'll see if we can. If again, there's no guarantees, but if you've seen how this name works prior, it usually has a couple green days to it. It did it in here. It did it in here as well, but that was on earnings. All right, so very, very nice. Tesla was also, I didn't trade Tesla today, but monster day. I didn't know if it was, I thought it might just stop at the bottom of value, which was 195. But even if you took it for a long there, you did pretty well. Sorry, that was at 191. Excuse me, it was the bottom of value. The point of control was 195. So really strong. This took off, and once it broke value, made a nice move. What being that I didn't take the trade today, what I'm really looking at is to see if this thing could finally close back inside the value area. Remember when this thing rallied, everybody said that they were long Tesla, back a couple months ago, but this thing rallied right into our resistance, which is 205.30. Again, why is this always significant? Why do I look at the value areas? Because it is that value area is all the volume and price from last year, and it's around one standard deviation, of that activity. So of course that becomes significant, right? And we see that time and time again. So for more of a longer term trend trade, I would be looking for a close inside the value area. And maybe the second time is, because it's been a couple weeks in here, right? Here was the last time it failed. I think, and that was right on their investor day. So speaking of investor days, and again, a lot of times that's how it works with investor days. We talked about how that would probably work that way for Tesla's investor day. They'll buy the rumor, sell the news. NVIDIA had their day today, right? So again, it's been trending, right? I continue to see these posts, and again, I'm not criticizing anybody. Everybody has a view, and that's fine. Everybody, that's what makes a market, is different views. But my signal, and I know this is not this is not early in the move, but I was waiting for this to get back above the value area and kind of prove itself, right? It did that, and then now all of a sudden everybody says, oh, I'm going to fade it, right? Because it's might be overbought, right? The best thing that you could do, in my opinion, and if you don't understand trend trading, there's plenty of books that you could read. Michael Covell has a great book called Trend Following, right? But that's where you really make, my opinion, and I know this has been a tougher market because we certainly have talked about how this is a sideways market through and through, this year. But, when something is trending, that's where you make your money, right? And if you've read that book, or if you know a little bit about trend following, the goal is it's not to time when the trend is going to end. It's to react when it does end, right? Nobody knows how long a trend is going to last for. Now, again, we could use certain things like resistance, right? Virgin point of controls to tell us where that might happen, right? Right now, we're at this R1 extension away from the value area, but right, there's so many people who want to fade things. The other day, oh, it's up too much, I want to fade it. So, Tesla kind of NVIDIA held in there, and that's a second day in a row. I did not trade it today. I'm still holding a small position because I don't like to hold these names when they have their investor day, because I just feel that the most of these investor days are the move is leading up to the day, and then it's sell the news on the day. I played it yesterday for a day trade off of this VPOC, but notice it did the same thing, right? So buyers are coming in and supporting this thing, right? And it is the play, in my opinion, it's the best play in artificial intelligence, right? I don't want to play some of the, I want to play the the name that is making the chips that go into this. So again, if I get stopped out in the last piece, so be it. But I'm riding the trend, right? And that could be up till 300, right? The stock was trading at 346 before, so anything is possible, and I'll take it off. I've got my stop in place. If it gets triggered, it gets triggered. But that's the hot theme right now. And again, I would rather play AI through this than in one of these other companies that doesn't have any business yet in AI. So to continue moving here through some names, but SMCI was another name. Remember, I've talked about this name a couple times over the last week since we saw that big call buyer last week. This name's out to new highs, really impressive. Up 9% today, out to 108. So I said in the beginning of this video, and I'm not going to go through a bunch of other setups. I'll go through just a couple quick other ones too. But if you're paying attention to the names that have acted strong, right, you can find the names, even though the overall market is sideways, right? You can find the names that are trending and that do look like they're in a bull market. All right, so that's SMCI. I thought another name that was interesting today, solar performed really well today. It was, I think, actually the best performing sector on my spreadsheet. It was up 5% for the day. That was helped by CSIQ, right? This MAXN had good earnings, right? And it came back, tested the, that's basically what you want to see, right? Is the retest of the 20-day moving average. It provides a better entry point and had a really nice bounce today, right? IoT, finally, I've been holding this name for about a week. I was maybe a little bit too early, but this held the 20-day moving average. Nice hammer bar on the 20-day moving average. So I didn't add to it. It's been a small position for me, but I'm looking for this to get above the 5-day moving average. Adobe was another name, right? I didn't know actually that they had an event when I saw the call buying last week, but really nice move, right? And this got right to the upside target that I was referring to, which was right around 375. Again, that's the Virgin point of control from back in here. So I will leave it here. There's a number of other setups that we go over. MSI I thought was interesting as well. Tex saw some calls. I took that trade today. I didn't really want to add much risk today going into tomorrow's Fed meeting, which I'll get to next. But this one saw some call activity, and I like all the downside targets. Terex was a name that had great earnings, really a powerful move, and the trend broke, and it broke quickly. But now it might see some support here. So I'm basically looking for a move back up to the 50-day moving average, which is around 52, right, in this one. So non-tech name. All right, so I mentioned I would talk about a little bit of strategy and the Fed meeting. So this is my comment from earlier. I said right before the close, I said I'm impressed with how strong this market is, right? This is sometimes what is nice about this market, right? It gives us a big up day when you have a big day of uncertainty tomorrow, right? And in my opinion, in a lot of my trades, I take the money and put it in my pocket. Why risk the unknown tomorrow? Let all the pundits on Twitter argue about what they think the Fed should do, and with the FDIC, and let all that arguing, right? We're traders, right? We don't let these people who just want to be right, let them try to be right versus wrong, right? We're in this to make money. Right, we're not in this to say that, oh, we got this right. And if you go through and if you look, sorry, I do this about once a week, but it is what it is. Twitter, there's some really great follows, but there's a lot of noisy follows too, who just want to be right, about what they think Powell's going to do and about the Fed balance sheet. We don't care about any of that, right? It's interesting, right? And it's something to keep in mind, but we're in it to try to be unbiased, listen to what the Fed says tomorrow, and then we'll put together our view based on how the market is responding to that, right? And what the market reaction is, and then we'll go from there, right? But this, given all of this, I don't want to say noise about the banks because it is important, right? But, you know, we've been stringing together like a very good month. There's been some good trading opportunities, you know, as long as you're watching your risk, right? You know, this month has actually done, you know, so far so good. I've been, you know, trading very well this month and following the signals, not getting over the tips of my skis with risk, right? And we look to continue with that, right? And to be unbiased into this Fed meeting and not holding much risk either. All right, guys, that's it for today's video. We'll have much more to cover tomorrow in the TTG pre-market session. I hope you join us for that. Have a great night, everybody. See you tomorrow.